Alright, in today's video, we're going to be basically going over how to find your daily bias. And this is, a pretty simple term after all the videos we, basically covered already. The majority of those, you should already have a daily bias, in my opinion, from the internal to external video to the only fair value gap video you need, and then how to find big moves, you draw liquidity. That should already have enough context to, let you know where the next, draw liquidity is and like how to frame your daily bias. But daily bias is more of an intraday thing, in my opinion. But even then, how does this frame your daily bias? So if you go and you draw right here this price line at the midnight opening, and then we go back over here and you draw it for Wednesday. So how I frame my daily bias is the previous 3 days, what has price offered me, and what can we expect from the previous 3 days. But before that, again, we got to do a top-down analysis. For daily bias, you can start off on the weekly time frame and you can draw your external levels of liquidity. So that is rule number one. You're always going to want to do a top-down analysis whenever you're trying to find your daily bias. The previous candles, this is on the daily, and then whenever you drop down to the daily, the previous 3 candles. So what has the previous 3 candles done? So if you go back 1, 2, 3 bars, you can see what is inside of there in imbalance. It's a sell side imbalance, buy side inefficiency. And how do we measure that? With the consequent encroachment of the imbalance. Whenever you're on the daily time frame, you can mark out these little external levels, I guess, if you want to. Like I was talking about, you can mark out these little daily external levels of liquidity, the little zone we're in. You can draw, you can draw your little premium to discount. Where would you like price to go, around this range, and then drop. This is kind of what I want to anticipate. Ew, that came out nasty. So this is kind of what I might want to anticipate. Not too far, like probably up here maybe. And, how are you going to frame that daily bias? Is through a weekly profile. Is the high going to be created on Tuesday, and is the low going to be created on Thursday? You have to keep that in the back of your mind. The weekly profile and the daily profile too. That's another thing. Boom. Let's talk about that. Whenever you have your weekly profile and you're using ICT concepts, he always talks about how the high of day can be created during London, or the low of day can be created during London. Depends on if you're bullish or you're bearish. And then same thing for the weekly profile. You're creating the higher low on Tuesday, and then the higher low on Thursday. If you're, depends on what order flow you're having. If you don't have your clear draw on liquidity, and like you don't know if you're bullish or bearish, you're gonna want to use that 20-day look back. That can help you even more, in my opinion. So if we mark out 20 candles back, that is Monday 14th, August 23. And then if you go 20 days forward, right there, the 9th of Monday, October 23rd, right there. So these are both your 20-day look back periods, and during these time windows, you're only gonna want to be focusing on what has price done. So we're going to take out this little external level right there, and we're going to mark out this one right here. So price created this low right here during this 20-day look back period. And, if we draw our fib from there to there, you can see we are inside of a premium. We created a little premium. And, now, of course, we have a sell side imbalance, and we have another, a buy side imbalance. And to me, what is price telling me? It looks like, since we closed below the consequent encroachment, but we haven't closed below fully on, this daily imbalance, but we did close below. What price is telling me in my, I can be wrong, of course. That's why I have that risk. It looks like it wants to go higher and then eventually drop lower. That is what it's telling me. It, eventually it can just rally all the way up, close below, above this, and then, target that. And that could be your little draw on liquidity. But, it's really just both ways. We have, sometimes there's heavy news and you probably don't know where the news is, and you want to use the previous 3-day candles. That's what I was talking about, the high and low. So we're bullish. You want to see it close above this. And since we were bearish, we didn't get a close below that. And then you want to use the immediate rebalance with the highs and lows of the previous 3 days. So what has the high and lows of these previous 3 days have offered? We didn't close below this low, and then for this one, we didn't close above this high. So price is really just consolidating right now, and it's basically, having a vacuum block That's basically when price gets really in a small tight range, and then next a big impulsive candle comes out. We're gonna mark out each midnight for the previous 3 days. So the previous 3 days, like we were talking about earlier, where was the high created? Around here. That high was created. Where was the low created? Right here. So during these 3 previous days, I'm going to want to see, if we are bearish, I'm going to want to see a price push up, then eventually, draw down below this little imbalance here, and then come down, retrace into it, and then eventually, have that move like that. That is kind of what I'm wanting to anticipate. Will we get that? It just really depends on how, price really fluctuates inside of another imbalance that was created. It was inside this one. Price can instantly just come up, and then eventually price can instantly come up and then just reject that and never come up here and take out this liquidity. You can probably come out and take this high after the new day is opened. So it just really all depends, because this range right here on the 3rd day was really heavy downside movement, and that's kind of what created the daily imbalance. And we also have the other imbalances right here that the other daily imbalance created, and it's just seeming like really undefined range to me. But overall, my draw for SPX is lower. Just using these 3-day candles, it's really just pretty simple. If we even if we get to equilibrium, every time we get to equilibrium, that just goes to show, every time we get up to equilibrium, don't even look at this previous 2 days. You can see right here, every time we go up, we reject. Every time we go up, we reject. And now we're hitting it, and now we're rejecting. That's kind of telling me that every time we come into a premium from the previous 3 days, we want to drop into a discount. But we stay in a discount for a good amount of time, and then we want to go back up to a premium. So it's really just consolidating. It's inside of a range. It hasn't broke any of these highs or low. I mean, this high or low, but I want to see it more push into a deeper premium and then eventually drop down. Is kind of what I want to anticipate going into that new week. And this is how you find your daily bias again. So this is really just all you really need to use to find your daily bias. You're going to want to use, the top-down analysis approach, previous 3-day candles. Again, you're going to want to go to the intraday charts. You're going to want to have that weekly profile with the daily profile, and then you're going to do a 20-day look back period, the high and low, measure that with the premium and discount on the 20-day look back. So anything in between these 20 days, you can see we have created the low right there, and then we have the high up here. So we are inside of a premium. We would be looking to target some external level of liquidity on this 20-day look back. It could be the high or it could be the low. It just really depends on what the order flow is telling us. On the daily, we're clearly making bearish order flow, because of course this little order block here was respected right here. This little bearish two up close candles here on the daily time frame is telling us that we want to have lower prices, because we clearly couldn't push above that. We did a wick into it. We didn't even close. So if we had a closure, that would have been more confirmation to me that these are very powerful tools of measuring where the next draw liquidity would be, and that can help you determine your bias again. So until then, I'll catch you next time. This is how you find your daily bias. Peace.